Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze Nifty on multiple time frames so that we are well prepared in advance for the next trading session, as well as trying to find out the best probable trade setups that might work for the next particular day, right? There's nothing certain in the world of trading, so that is why the reason I said that might work. Right. And along with analyzing and finding out trades for the next day, what we also do is we focus on key price action techniques, which has helped me and I believe will help you guys in case if you focus on it and try are willing to learn it with an open heart. So, in case if you like my simple way of trading Nifty, the only instrument that I trade and focus on, and in case if you like my simple way of analyzing it and sharing the price action techniques with you or how I build a story around what is happening in the market and then enter the trades in a much more planned way, please like the video, subscribe to the channel, put down anything that you might have to say in the comments box, be it feedback or be it criticism. I'm open to everything. So on that note, let's just start with what we had planned for today's market versus how it played out and how did we play. Today's market was very volatile. But as traders, especially as option buyers, volatility is what we need, right? We don't need lack of volatility, right? Which was the case for the past couple of days. As you can see, these 2 days were extremely low volatility moves, right? So you do not get any particular good moves. And as option buyers, what we need is moves like this, where you can move like this, where you can get a faster, quicker move in a short amount of time so that you can benefit out of the option buying trades that you have entered into. Right. But what comes with volatility is trapping, and that is something which you should focus on is not getting trapped in the volatility, right? On the wrong side of the market, because the right move with the right momentum in your favor is something which is very rewarding. But the opposite of that, in case if you're on the opposite side or wrong side of the momentum, you lose your money very quickly and you hit those stop losses like anything. And that is something that I always focus on. So more than catching the right trades or more than getting the trades right, is more important is not getting caught in the wrong trade, right? So what we had planned yesterday was we'll create a long position above this particular high with a pullback, look at a short below this with a pullback, market opened flat, almost flat, gave us a good 5 minutes closing above the zone. Now, in case if someone is new here, not watched any of my previous videos, I always have the inside bar indicator. So this is the inside bar alert, which is there on my always on my chart because a good inside bar, just like this one, is also a form of a pullback. And when I say that we'll enter along above a particular zone with a pullback, a good inside candle like this, like today's, is a or a inside bar or a halt candle, whatever name you might want to give it. You can call it by that name, but that is something that we look at before going long or before entering our position. So today was a very good day. The first 5 minutes candle gave a closing above this, followed by one inside bar and above this high. We entered long. I entered longs into Nifty. Nifty gave a very good momentum. Momentum slowed down. So this was my cue that the exit might be very near, but I will not exit until unless I get a good signal. So I exited around this candle when this closed below the high of this doji, and I think I made a good decision. So what you can also see is when the momentum comes and you see the size of the candle shrinking, that is something a sign of the momentum fading away, and then the prices might reverse or might retrace, not just reverse, but it might retrace, right? It is not going to go up all the way in your favor. It will retrace. So that is something where you will lose a part of your profits, which you are already seeing on the screen, and that works negatively for most of the people. So yeah, as I have always been saying, right now is the time to trail tight. So yeah, I exited somewhere around here. This was the first trade of the day. The volatility continued after such a good move. I was not expecting markets to come down all the way here, and I was expecting it to actually retrace. So that was the reason I uh, drew this particular Fibonacci on my chart, and this was the support zone that was there, as I always tell you guys. So zero point 0.5 to 0.618 is the only zone that I look for while drawing Fibonacci. So I'll just delete this for now. This was the zone where I expected Nifty to take some support, and if it had to continue the upward journey, this was a good place to for Nifty to take support and then reverse back, but it did not. So the story, this is where the story comes into the play. We are now the once Nifty closed below this particular uh, support zone of ours. What we know, support once broken turns into resistance. Plus, we are near our day opening after moving up so much, right? We from the day's low till the day's high, we moved roughly around 300 points, and now we're again back at the same point. So that what does that mean? We might be seeing some weakness in the market, strong sellers in the market, whatever be the reason, but that is something. Uh, so after market closed on below this particular low, below this particular zone, what we needed was a pullback. The pullback came in this form. So this was my second trade of the day around here, gave a good uh, profit immediately. I exited somewhere around here. Still a good trade, right? There were no RSI divergences per se in the market, and that is why I did not trade this particular uh, up momentum which came. But I had, after this particular trade, after I had again used Fibonacci from the top till the bottom that was formed, and I was looking at, again, as I will tell you guys, the 0.5 to 0.618. This was the zone that I had marked. So for any positive trades, I wanted markets to go above this. And in case of a retracement, I wanted it to take resistance from this zone, which is exactly what happened. Market reached almost this zone, went into sideways zone, broke down. Now, if I had shifted on a lower time frame around here, this is where I entered. This is somewhere, some place where I exited, right? This was the last trade of the day. So good three trades in the day, one on the call side, two on the put side. And this is what happens when you are well prepared in the market. You know how to read the price, you know how to build a story around the price. So although the prices had given a good momentum on the upside in the at the start of the day, does not mean that we'll not take short trades, right? But that does not immediately mean that we'll jump into the short trades right as soon as you started seeing a couple of red candles. We need markets to break down. Also, I entered around here. See, although the markets had given such a big move, it does not mean that you're going to capture all of it every single day, right? Even if you capture this in a good quantity in Nifty puts, you can run your household on it. Trust me on that. So let's focus on the process right now. That is what is more important. And if you feel that market has already fallen so much, will it fall down around much more than here? So that is where the storytelling comes into the part. Yeah, there is weakness. There are strong sellers. We are below a support zone now. Market should have taken support from here in case it had to go up. It did not. What does it mean? It can go down or it can go sideways. So that is the reason I did not take immediately the short trade, waited for a pullback. This was the pullback which came, and once it broke down, I took this trade here. So that is what how planning your trade works. So when market started falling, I immediately was ready with my support zone. And was ready willing if the market is taking support there or it is breaking that particular support. It broke down. I got prepared for a short trade with a pullback. Once again, market created a new low. I again drew a Fibonacci and marked my support or a resistance zone above which we were bullish, but below which we were bearish. And again, with that particular thing and price point in action, we entered our third trade of the day. So that is how we should plan our trades or on an intraday basis. We should not have any bias. We should be prepared for anything, should not predict anything, but be prepared for anything. That is what I always say should be the mantra in the market. You should always know your stop losses and your risk to reward based on your and you can do your position sizing based on your risk capacity, risk taking capacity, and I think you will do good. Again, I was observing this particular consolidation in the market in form of triangle formation, but again, there were no trades which got initiated, and plus it was around the in case if it would have broken down from here, it was around the end of the day. So again, no more further trades. So that was it for our today's trading. Uh, Now let's start the planning for Monday, the 5th of May. So we'll start with the weekly chart. Weekly candle still looks good, although I would have preferred if it would have given a closing above the previous week's high. So the previous week's high was 24,366 roughly, and today's closing is 24,346. If it would have been just 20 points more, I would have been much more happier. That would have fulfilled my three conditions: a higher low, higher high, and a closing above the prior high, right? That is something. Again, this is nothing to worry about on a weekly time frame. We are still doing good. What we can observe is a So also since we are here, let us adjust just a second, guys. Yeah. So roughly the same zone just moved up a little bit. So this is the zone entire on the weekly time frame. This is the up move which is there. So till the time we are above this, markets can come down to this level. It's a safe retracement. So nothing to worry about. Now, if you come on a daily time frame, now see on a daily time frame, today's candle, of course, it looks quite scary, but nothing to be worried about. These are the things which comes around when your country is going on ahead in a war-like situation, right? Plus, there were news of fears of recession in the US, which were in the price in the market during our hours, and as well as some crude oil prices fluctuating. So that is the reason market saw a good fall today. The positive thing is both FIIs and DIs are net buyers in the market today. So mostly this is a retail-led panic-based selling in the markets. Since they are seeing a good retracement, I think they are booking some profits in their positions, or maybe they are booking taking profits and maybe squaring off their positions and getting ready for the war. Now, if we look at the trade for a on a 15 minutes time frame for Monday, so this is the zone that we are changing every day based on the price. So price has already created a new high, so this will move up our support zone, right? And if you see again, the market actually, since this high was made, and if you would have drawn this particular Fibonacci as well, markets have taken support from and bounced off from exactly our levels, right? For Monday, we'll again keep the plan of action very, very simple. Let's just draw this and this as today's range. We look for a long entry above this with a pullback. Short entry, although I would be tempted to take it below this, but again, this will be a support zone. But then again, as I say, it should be, we can, based on the price action, we can plan from here itself. And once the prices are below this zone, we will be much more convinced and enter for a short entry because this is the 0.5 to 0.618 zone for this entire up move. And once this breaks, the prices can go bit down on the downside with a good momentum. And that is something that we should look at capturing. So anything, any price action below this particular zone should be traded very, very cautiously. And about here, we'll keep a trade up, take out trade above this particular high only. So the plan of action is very, very simple again. I hope you guys have a good weekend. This is all from my side for today. And I'll see you guys again on Monday post the markets. Uh, Use the weekends wisely for back testing or reading price action or going back into the charts and seeing how trades have actually worked. And you can also watch a couple of my videos in the past to see what we had planned for the day and how it turned out and how did we trade using our techniques and using our setup. You can also watch the video on the setups which I've used. Those are pretty simple, very basic stuff which anybody would know or anybody can say. But trust me, there are people who would be selling these things at a very high price in the name of courses, which I'm providing it for free around here. So please make use of the weekend for learning and education. That goes a long way. And also, yeah, for back testing as well as analyzing your charts. So that's it from my side. Have a good weekend. Cheers. Thank you so much.